The markets may be closed on this Memorial Day, but money never sleeps. So Kevin and I are still here with you, putting out information, trying to get you ready for a big week ahead in the markets. Before we dive into that, please do a couple things for us. Hit that like button down below. Subscribe to our channel. Nothing that Kevin or I say is financial advice. We're not financial advisors. We're a couple of guys who love following the markets, placing our bets, watching how things play out. So do your own research before make any buying or selling decisions. Kevin, it's been a crazy weekend for you. We got a little bit to talk about today. Shouldn't be anything too crazy. There was news late Saturday about a debt ceiling deal between Biden and McCarthy. Looks like we're moving closer to that. That has been given to Congress. They have 72 hours to review it before a vote on Wednesday. We'll see. Looks like that'll go through. We're getting some of the details around that deal. And the markets responded favorably, but I think they're a little out over their skis on that one.
Yeah, I completely agree. I think again, I saw a tweet. Maybe it was a Kobe SQ letter, but it was talking about how a lot of these deals recently have been happening over the weekend when the markets are closed, and he's been seeing tons of euphoria going into the beginning of the weeks when the trading begins. Again, this is just another deal very similar to how SIVB was pretty much bailed out. Really interesting to see how the markets rally going into this Friday. Right, it seemed like it was pretty like they weren't going to get anything done. They got something done on Saturday. The markets in crypto at least started shooting up a little bit, but I think that we are at a point where there's not much more that could push the price up. Okay, we got a deal, but within those, the details of that deal or the one that's proposed right now, there's a lot of bad stuff that's not good long term. So it's right now, sure, have your fun if the markets are pumping, but at the same time, this seems like, okay, maybe this is the last bit of liquidity for people who shorted a little bit too early, and maybe they're going to try and trick people into maybe closing some of those positions. But for the most part, I think right now this is a very manipulative market, and I think a lot of people are going to be losing some of their conviction bets that they place based on some of this euphoria.
The question has to be, for our purposes, what in this deal, what from this deal will impact the markets? So a big part of it is they're going to have to raise more money. There's going to be more bills. There's going to be more liquidity pulled out of risk assets, most likely. We also saw that they're moving the start of student loan payments up a month. So I believe July 31st is when student loan payments begin again. So 1 month sooner. That is also not good for the markets. We've already seen demand going down. We've already seen people spending less. We've already seen people cutting back on discretionary. So this is going to be billions of dollars a month that is going to be pulled out even further of people's savings, of people's spending, and it's going to be going back to student loan payments. So I'd say from that standpoint, that's not great for the market. We're going to talk more about stagflation later this week. That definitely impacts it for sure. Yeah. So definitely, you got to keep that in mind, and where people are going to be getting this money from. Hopefully they have some savings, or they're going to be going further into debt, or they're going to be selling some of their risk assets. So in no way, shape, or form can that be a positive for the market. It just can't be. That has to be a negative. We've seen this, the headline news lately, and it was funny. As soon as a deal was reached on the debt ceiling, I started seeing headlines like, okay, now traders are looking at the next catalyst of interest rates. It's like, no, you should have been looking at that before. Don't wait. If you were not paying attention to what was going on with inflation in the next Fed meeting, even during the debt ceiling deal, then you were multiple steps behind. So we've already seen the probability of a 25 basis point hike is now at, last I checked it, let me pull it up real quick. It is at about 57% chance of a 25 basis point hike. So we've seen that gap start to increase a little bit. The other day I saw it 65%. It's come back down a little bit. I still think we're going to see it. If we look further ahead this week, we have a bunch of Fed presidents speaking. That'll give a little bit of a hint that usually move the markets. The big days are Wednesday when we have the JOLTS report, so job openings. That number is expected to continue to decrease. On Friday, we have an employment report, the unemployment rate, and hourly wages. The employment report is supposed to show that less than 200,000 jobs have been added last month. If that number comes in hot, let's say we get a 300K number, I mean, that's really bad for the Fed's fight against inflation. I don't think that's going to be the case, but I mean, we've seen it happen before. We saw 1 month where we thought it was going to be like 240,000. It came in at 500,000. So it is possible. Tread lightly. I think people want to get bullish again. People always want to like most people, they want a reason to be bullish. They want to see the numbers go up. They want to see the value of their accounts go up, understandably. But at the same time, the market doesn't care what you want. The market's going to do what the market's going to do. And so tread lightly. Don't get caught up in FOMO here. Look at the fundamentals. Look at what's really moving the markets. And, it's back from headline driven to data driven.
Yeah, I couldn't agree more. I mean, for me, just looking at this, like, obviously the big thing is there's pretty much no cap on spending, right, until 2025. And that's probably the worst thing, I think, out of all of this, because again, we could say that maybe we're not going to be spending as much. McCarthy can say that, but at the end of the day, if there's no limit, anything could happen, anything can pop up. And if we're seeing the Fed trying to do quantitative tightening, and we see Congress pretty much has the ability to borrow and spend, that's not good for inflation either, right? Long term, that's not going to be at all beneficial in bringing inflation to that 2% level. It's also not going to be good if we're looking for a bull run in 2025, right? So the whole thing, it seems like this narrative of this bear market is 100% debt, right? Debt from consumers, debt from banking side, debt all the way from top to bottom. And if we're seeing more debt accumulated going into what we are anticipating to be a bull run, I don't know how sustainable that bull run is going to be. That might be very limited, if not maybe a deeper, we could see another bear market, like a short-term bear market. Again, we need to get to a point where debt isn't the issue. And clearly it's just building up to the point where now we have student loans that are going to be resumed if this gets passed, right? We knew that was coming, but now it's a little bit earlier. We're seeing, people not being able to spend as much money because they have no savings. They're dipping into their savings because they literally can't afford anything. They're just over leveraged in debt. So this deal, you can say, it's good because obviously people are going to get paid in the short term, but in the macro, I think this is more detrimental than anything. And even from the Republican side, again, I'm not playing politics here, but it's extremely irresponsible not to have a limit going into 2025. That's just asking. That's a can of worms that you've opened, and now you're going to have to fucking deal with. I mean, this is not good for anyone long term. So I can't say that enough.
Yeah, I completely agree with you. The spending is just out of control. Like it really is. And God, I don't want to get political here, but then like you look at around the country, just how disrepair some of these areas are, how bad it is. It's like, what are we even spending all this money on? But anyway, that's beyond the point. Let's focus on the markets. That's what we're here for. Sure. So I see the DXY is still looking strong, still hanging out over 104. We closed on the week, right around and right above some key levels. So the S&P closed just a hair over 4,200, NASDAQ 14.3K, Dow just over 33K. So I'm interested to see what happens when the markets open tomorrow. Is it still going to be bullish with the debt ceiling deal? It seems likely it's going to go through Congress, but at the same time, let's not act like we have sane, rational politicians here. We still have on both sides of the aisle people that are batshit crazy who could absolutely delay this if they want to, and that would be problematic. I know that they moved the X date back to June 5th. Still, we're still in like danger of the credit rating getting moved, getting decreased. We're in danger of someone coming back to Washington and being like, you know what, I'm going to hold this thing up because I don't like part of it, and I need the people I represent to see that I'm going to fight for them. Blah blah blah. Enough people do that kind of thing, and we could see this thing getting delayed and being in a bad spot. I don't think it'll happen, but I mean, some of these people are wild cards. I just don't even know what they're going to do.
I mean, that's a great point. The fact is, nothing's been signed yet, right? It's got to go through Congress, and then at the end of the day, Biden's got to sign this. So right now, what we have,
it's got to go through Congress, it's got to go through Senate, and then it's got to go to Biden.
Exactly. So what we have is a plan in theory. It's nothing set in stone as of right now. So yeah, I mean, that's a lot of people that's got to go through. I definitely think that there are some people in the House, at least, that are probably going to try and stop it. Would not be surprised at all. And again, do I think it's going to be signed? Do I think everything's going to be okay? okay relative to default, most likely. But again, the fact that there isn't something set in stone, and these payments aren't going to be going out. I don't know. Maybe we do get close to the point where we lose that credit rating. It's still very possible. It's like 50-50 in my opinion. Again, we got to see how it plays out going into this week. But when is June 5th actually? I mean, it's not like set in stone that that's going to be the day that they run out. But June 5th, that
It's a
is
Monday. Next Monday.
Next Monday. I could see this going to the late hours next week. Like later into this week, close to June 5th. It's very possible. Yeah, I don't think again, it's a lot of bodies it's got to go through. A lot of people got to sign and agree, and I think that there is going to be some roadblocks along the way to get to that point where it's signed and the U.S. is able to pay. So I wouldn't count out the credit rating being dropped.
Yeah, let's look ahead a little bit. So let's say on the optimistic side, Wednesday rolls around, they vote on it, it goes through, passes the Senate, goes to Biden, he signs it. I think we see probably a week and a half or so of the markets responding favorably. Okay. Mm-hmm. So we have the next Fed meeting on the 14th. I mentioned on the last show, we have inflation on the 13th. So I could see if everything goes smoothly, the markets are going to be strong heading into that inflation reading. But I think the inflation reading is coming in hot, like we saw with PCE. So I don't day trade, but if I did, I would be very cautious being long going into that inflation reading.
Oh yeah, 100%. And again, we didn't react from the PCE data in the markets whatsoever, right?
No, not at all.
Nothing.
The markets went up.
Exactly.
Like it doesn't make a damn bit of sense. Like it does not make any sense, Kevin.
So we got to think about how that's going to play in. But I think that PCE was a pretty good indicator of what's to come. We saw inflation spike based off that data. And markets did nothing about it. And that's pretty much a guarantee, the rates are going to have to go up higher because we're not doing enough fast enough. So
you know what? March numbers got revised up as well.
They did. I saw that.
No one talked about. No one was talking about that. So there's a lot it's
bullshit.
I don't know, man. It's bullshit. It's setting up to be an absolute disaster because this inflation is sticky as hell. The demand, I know it's becoming discussed more, but we're gonna keep hearing about stagflation, man. It's looking like a possibility. I'm not an expert on this subject. I've been reading up on it. I've been trying to understand it better, trying to look at what happened back in the 70s and what parallels there are. But just from the most basic level of it, it's not looking good. This is shaping up to be I don't want to say it, but it's shaping up to be a lost decade.
I know, I agree.
We are in just it's a rough spot that we're in. A lot of these really smart guys, like Drunken Miller, who've been saying that we're going into a 5 to 10 year bear market. I don't think they're wrong. You got to be prepared. If you're not preparing for that possibility, you're going to get caught with your pants down, and that is not where you want to be when there are bears around.
100%. And I think the one thing, obviously we're seeing inflation spike, right? That's the one part that we've got. We're seeing demand drop, but the one thing we're not seeing is unemployment rise. We haven't seen that aspect of it yet. That's the one I'm not excited to see, but it's the one I'm expecting to see, because if unemployment rises, then that puts us in a pretty good place for stagflation, where just nothing is getting better. The inflation remains sticky. People are still, a good amount of the population is unemployed. It would have been easier if we just went into a recession. If you think about it, just got it over with. But it seems like we are getting to a point where the longer it plays, the worse it's just going to get. And Michael Burry's right. The longer a bubble plays out, the bigger the burst. Yeah,
it's going to get ugly, man. Are there any charts you want to look at? Anything that has really caught your eye with crypto? I mean, we saw that big move up yesterday in ETH and Bitcoin. It started to pull back now. Anything that you want to look at before we call it a day?
Yeah, absolutely. I just want to pull up Bitcoin dominance, because this thing was pretty impressive yesterday. I mean, it just shot straight up right before the weekly close, right? And that's obviously because Bitcoin shot up in price. But we're seeing it pull back just a little bit right now. But we got to a height of today, so past midnight. What is that? 48.42%. And, obviously we came down from this height over here of, 48.9. So that's a pretty good move up to the upside again. That's nothing that you should discount. But we see that, this is still a really high number and it's really sticky, this being this high. Bitcoin still has dominance over pretty much the rest of the alt market. Ethereum obviously has a little bit more strength, I would say, against Bitcoin as opposed to the other alts. But this is why you're not seeing any of these altcoin seasons that everyone was calling for. Bitcoin dominance is just too high. I feel like if people are exposed to crypto right now, it's going to be in one of the two larger market cap ones. It's going to be Ethereum. It's going to be Bitcoin because no one really trusts these alts right now. So Bitcoin dominance being this high is still extremely dangerous for everything in the market. I wouldn't be surprised if we still see some alts drop 50 to 90% from here. Like, I'm serious. The fact that this is still high, and I think that there is still some progression to the upside over the next few days. I mean, I wouldn't be surprised if we come in and take out 48.48 if we do see a little bit of a pump again. But yeah, it's a dangerous place to be. We can see that Bitcoin also. I'm going to shoot over to Bitcoin right now. Uh, you know, shot up all the way to 28. What is that? 28,447, and it came down a pretty good amount. It's resting right above the 50-day moving average, but we're putting in a little bit of an irregular correction here in this wave three. I still think that we do have to come down to around this 24-25 level, get a little bit of a bounce before we go in maybe a little bit lower to 23ish. But for Bitcoin right now, it's just, it's doing what it's doing. I think it's liquidating a good amount of people. And we saw this price shoot up right over the weekend, right into the weekly close. And obviously, new day today, we're seeing a pretty good, pretty good sell off, right? We're down, what, about $430 from where we were yesterday at the weekly close. This is going to play out. I think this is going to be something that we're going to just have to keep an eye on. I don't think that we're not going above this, in my opinion. I don't think there's enough money or enough volume to drive us into that scenario right now. Let me just see if I can find the volumes for Bitcoin. Yeah, I mean, yes, these pumps, look how low the volume is over here as opposed to it is over here, and the price is still, slightly pushing up. There's still extremely low volume in this, and it just tells me that we're still in a bear market. Again, we're in downward trend. Maybe we get some relief rallies to the upside over the next few weeks, but I think that we're just going to have to keep an eye on the trend and stick with that, because obviously the trend when it was pushing up back in January to May, or January to April, that was the way to be going, obviously long. But now I think that we've broken from that. And if we look at maybe some of the larger macro time frames, let's see the weekly. The weekly, it was coming down pretty strong yesterday, and then we got a little bit of a tick up. And then again, look at how low these volumes are on the weekly here. It's extremely low. So it's going to play like this. And again, they're going to try and drain as much liquidity as they can from the market. The market is really stupid right now, in my opinion. I mean, I can't say it any other way. I think that a lot of it is driven off stupidity. People are just not sure really where they want to put their money. They want exposure because they have that FOMO, that sense of, what if it does go up?
I'll tell you where they want to put their money. They want to put their money in these stupid meme coins. I'm going to put it, if you're watching this, I'm going to put in the description for the show a link to Gamblers Anonymous, so that if you're still trading meme coins, you just click that link and try to get your shit together, because it's just, there's no, what are we doing here? What are we doing here? We're still trading Frog and all the, every other coin. What is going on? There's no, it's a game of chicken right now. You are playing chicken, but you're playing it against, people who have the game rigged already.
Yeah.
Right. You're playing hot potato, but the person you're playing with is controlling the potato. So let's just not do that. Okay. I know that it was fun for some people for a while, but at this point, if you're still going after every meme coin that is dropping onto the market, you are making you're going to look back and be like, why did I waste so much time and money on this crap when I could have been saving that money, setting it aside, and actually buying something that long-term will have value, as opposed to something that is inevitably going to zero.
Absolutely. And I'll also say this for the people that are trying to short these meme coins. I'm not going to tell you what to do, but people know what your positions are in some of these exchanges. They will liquidate you. They will absolutely liquidate you. You'll see a 23% move to the upside, and a 23% move to the downside within a matter of an hour. I would just steer clear. I'm personally just, I have no exposure to that shit. If it's got utility and it's been around for a while, I have a little bit more faith in the charts and the technicals to look at it and say, okay, I could trade this without the amount of fear and anxiety that these meme coins that sprouted out to the market 2 weeks ago have. I don't know, man. The meme coin, that all that bullshit, that's just liquidity driving 100% in the bear market, because look how low the volumes are. They need money somehow, and they know this retail are going to be like, oh, this is the new sheep, this is the new Doge, and they clearly got
If
it.
you're still comparing these meme coins that are dropping in this market to meme coins that dropped during like bull cycles, you're just not even a little bit paying attention to what is going on. Like it's just it's not the same. It just isn't. Like you can't compare what is happening now to what happened in the market 2 years ago, 3 years ago, 5 years ago. Okay, like it's totally different. This is why you have to pay you have to pay attention to what is going on from the macro standpoint. You cannot just look at charts. I know that we look at charts on this show, but that can't be the only thing that plays into your decision. Okay, otherwise you're going to get wrecked.
I will say this: there are a lot of people right now who I extremely respect, like some of the smartest people and traders on Twitter. And I think they're dead wrong, because they are paying attention to the charts and they're not paying attention to the macro and the charts, right? The price is going to go where the price is going to go. However, the impact that the macro is going to play in some of these charts, you need them combined. This is not a one way ticket. You got to do both. It's a dual party system for trading.
You need context as well. Like there's context
absolutely.
that has to play into this. Like it can't, the fun lines and patterns and everything mean nothing if you don't understand the broader context behind it. So let's keep that in mind. Okay, not everyone is going to be trading 5-minute charts. Think bigger, think macro, zoom out a bit, and have some patience, please. Please. Like I've said it before, I'll say it again. Like the best investments I've ever made are ones that took a long time to play out. It's okay to not be constantly buying and selling. It's okay to hold something for years without expecting the price to shoot up. Like, especially in this day and age, like there's going to be so many opportunities, but people are going to miss them because they're going to be impatient and sell too soon. So like, just take a breath. Maybe do a little bit of reading. Maybe read like Psychology of Money or some of these other like buzzword books that people talk about. Like Market Mind Games is one that I started reading that's really good. That I think is helping me out for sure. But just take some time to like study and learn something, and not always get caught up in the charts and expect the price to go up immediately.
Yeah, I couldn't say it any better. I got nothing else to add on top of that. That's wise words from Jweb.
All right, we're gonna wrap it on that note. I don't often put out wise words, so I'll take it when I do. We'll be back tomorrow for our live stream, 3 p.m. Eastern. Excited to see how the markets are playing out. Like I said, we'll have some Fed speak tomorrow. JOLTS report Wednesday, the big employment day on Friday. So big week ahead. Obviously, we'll be staying on top of everything with the debt ceiling, looking at how that plays out. So thank you everybody for watching. Real quick, down below, we got those buttons that we need your help with: the like, the subscribe, dropping a comment, and the biggest one of all is sharing us out on social media. We really enjoy doing the show. We want to try to add as much value as we can to as many people as possible. So thank you for being here. Have an awesome Memorial Day, and we will see you tomorrow.
Take care, everyone.